Good evening. It is Wednesday, October 25th, 8 p.m. Little bit of an interesting day today in the markets. Stocks were actually down, if you could believe it. Dow was down almost 200 points at one time. They cut that in half. It closed down 112 points on the day. Had a down day. S&P down 11. NASDAQ down 34. What was the reason? I don't know. Maybe just some profit taking. Gold did okay today. It was down to that 1270 level. Came back up to 1277, up about 90 cents. So, quiet day. Last night, I was driving in the car. Turned on the radio, listening to the John Batchelor show. And he has Larry Kudlow on. Okay? And they were interviewing a guy who wrote a book, The High Cost of Good Intentions. John F. Kogan. Never read the book. Not recommending it because I've never read it. The book is about who should be the next Fed chair and so on and so forth, and what you should look for with the Fed and all this. They're talking about a Fed chair should understand the business of America. And the Fed chair should understand America's economic dynamism. How things go in and out and fail and succeed. And the Fed chair should know all that and understand that. Then they talked about how the president has a tremendous opportunity for growth. That's all you hear, growth. Monetary policy, fiscal policy, tax policy, and regulatory policy. Okay? Those are the keys. And the Fed is monetary policy, obviously. Okay? And there's been past Fed people that they limited growth. And they believe in secular stagnation. That's the words they use. Secular stagnation. And basically that all these models, these Fed models in the past, and who's been the Fed chair, that too much growth will cause inflation. Okay? So if we get sound tax policy, if the deregulation continues, if we can control our spending, this economy will take off. Those are the big ifs. So if the tax passes, the tax cuts pass, and if we can continue to deregulate and go back to the Wild West, okay? And if they're gonna stop spending, who's kidding who here? If we get all those things, this economy is gonna take off, okay? But we can't have a Fed chairman or person that confuses real growth with inflation, because then they'll just slam on the brakes. They'll choke off growth. This is the big buzzword, growth. And what did I say? There's only so much pie to go around. We've already stuffed ourselves. There's no more pie, okay? This needs ever-increasing amounts of debt to keep this system sustainable. Okay? So they want to keep playing this myth about growth. And who wouldn't believe in growth? I mean, he talks, Kudlow, like, well, I'm a believer. Well, who wouldn't be? Oh, I raised my hand to growth, of course. I mean, what are they kidding me? Then they talk about how the last Fed, they missed the Great Recession. Yeah, I'll say amen to that. Boy, did they miss it. They created it. They didn't just miss it. They created it. Okay? Well, the subprime crisis is contained, Ben Bernanke said, right? Oh, I don't see any bubbles, right? The actions that they took during the Great Recession, maybe they were defensible. Well, maybe they had to take this extraordinary action, right? Maybe that was defensible, this QE and zero interest rates. Okay, but then they pursued the wrong policies afterwards. What choice did they have? Now, I'm not defending them, okay? But what choice did they have? See, these guys want to tell you that somehow they can get this new Fed person. He understands the business model and the economy and America's dynamism, okay? And, okay, well, we don't have to raise rates, right? And if the economy just heats up and we get this stock market to 30, 40, 50,000, but this is not inflation. This is real growth, okay? So we don't have to. Has the economy ever choked, the Fed choked off real growth? What do, the Fed? They lower rates or they raise rates? Do they do anything else? Now, one guy, this Kudlow, he likes to say how free market is the best form of capitalism and free markets. But on the other hand, he's standing here having a conversation about who should be the next Fed head. Why doesn't he say, why don't we do away with the Fed? Huh? That's the real question. No? Not who's going to make the best Fed person. Who's the one that's going to unleash this growth? Right? Free market capitalism is the best form of prosperity, right? That's his shtick, right? Then why aren't you saying let's get rid of the Fed, right? Then they talk about tax cuts, right? Tax cuts will grow the economy and pay for themselves. See, that's the thing again. Tax cuts are going to increase growth, and all that additional revenue will pay for themselves, right? When are they going to talk about actually cutting spending? See, they won't. That's like the boogeyman. They're not going to address that. So they'll come up with this other shtick about how, well, we'll decrease taxes. That'll expand the base. That will create all this growth. And all this additional revenue will go to the government. Okay? Sounds great on paper. On paper, it sounds really great. Okay? But none of them want to talk about decreasing spending. That's that fiscal policy, right? Let's just sweep that under the rug. Okay? Then John Batchelor, he said the markets keep going up, Larry, no matter what the news. Hello, ding, 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 ding. You notice that too, John? Oh, it goes up when there's bad news. It goes up when there's good news. Yeah, you notice that. What have I been saying? No news is good news. Good news is good news. Bad news is good news. Doesn't matter. Then they switch gears and they talk about recession. Recession. Kudlow says it's very hard to find a recession signal. It's very hard to find a recession. He can't see a recession anywhere. There's no signals indicating recession, right? If you look at the numbers, profits and GDP, if you look at the numbers, and that includes profits, it's hard to find a recession signal. So there's no recession anywhere on the horizon, right? Well, who's telling you the truth? You can Google recession, right? Go to YouTube and go search for recession. You're going to see a lot of YouTube video. The recession is here. It's imminent. It's right here. Okay? These are the indicators. It's just flashing warning. We're going to have recession. According to Kudlow, he doesn't see any signal at all for a recession. Who's right? Who's right? I'm not saying he's wrong. Who's right? Because all you hear is recession. 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 He says recessions are very bad for stocks. But it's very hard to find any clear recession evidence. But he says it could change in a year. So maybe we got another year of stocks going up and up and up. And maybe in a year, maybe we'll start talking about recession. Unbelievable. Then there's this guy, Richard Turnell. This is shocking. This is mind-blowing. Talking about low volatility. Now, right now, we're in low volatility environment, right? The VIX is at an all-time low, right? Why? Why is it at an all-time low? Is that a good thing or is that a bad thing? Well, according to this guy, the low volatility environment, right, that we're in reflects the very stable economic environment we're in. See, everything is wonderful. Everything is Goldilocks, according to him. Oh, it's very stable. So that stability shows up in the low volatility. Right? That's his shtick, right? On the other hand, somebody could say these investors are whistling past the graveyard, right? And this low volatility is because they've been put to sleep by the Fed, right? Well, which one are you going to believe? You got to pick. Which horse are you going to back? Is it a stable economic environment that's causing this historic low volatility? Or is it investors are just sleeping at the switch? That they think stocks will go up forever and everything is wonderful and they're just so complacent and they're just whistling past graveyards. Who are you picking? Is there a recession right around the corner or is there no signals at all? Which horse are you going to back? This guy, Richard Turnhill. Okay, so then he's pressed. Well, yeah, but this low volatility environment. How long can this go on for? This economic expansion, supposedly. And he says his entire career, on average, economic expansions, the cycle, they last 8 years. 8 years. And we're in the 8th year. But somehow, this time, it's different. You know why it's different this time, according to him? Because we've had one of the slowest, weakest expansions for these 8 years. That doesn't matter. You know, it was so slow, we don't go by time. Now we have to go by, excess. Things overheated. So this is so slow. So now we get 8 more years. We get 8 more years, okay? Because this is one of the slowest expansions in economic history, you come to the conclusion we are somewhere in the middle. So we got another 8 years of this. 8 years of no and slow growth. And there's that key word again, growth, right? Who are you going to believe, people? Huh? I thought it was very interesting. Very interesting. Just wanted to share that with you. Right now, gold's up about $1. I keep saying this trading range is getting tighter and tighter and tighter. Okay? It's hovering right around here now at this 1280, 1278 level. Got to watch this. Is this the end? Is we going to get more down days with stocks? I don't know. We haven't had a correction in I don't know how long. I mean, this is like, foreign territory here. This is like, I don't know what. So let's just watch and wait and see what happens. That's it for now. Not much else to talk about. I could mention this bond market again and how we got to watch this 10-year and this Maginot line, how it crossed this line of defense at 2.4. It's 2.45, okay? And we're supposed to, no, I'm not buying it, okay? So, anyway, that's it. We'll see how this plays out the rest of the week. That's it for now. Ciao.